If you can't tell me the exact date your 2022-23 pension carry forward expires, you need this video. I'm Hamid from Wealth Decoders, and right now, as we speak, thousands of people are about to lose up to £40,000 in tax-relieved pension space. Forever. No second chances, no extensions, gone. By the end of this video, you'll know exactly how pension carry forward works, why April 5th, 2026 is the critical deadline, and how to potentially save thousands in tax before it's too late. This isn't theory, this is your money, and the clock is literally ticking right now. Here's the truth. According to HMRC's 2024 Pension Statistics Report, roughly 72% of people eligible for pension carry forward never use it. That's insane. The Institute for Fiscal Studies, led by researchers like Carl Emerson, has consistently shown pension tax relief is the single most generous tax break available in the UK. And most people just ignore it. Most people don't know this. Pension carry forward is a rule from HMRC that lets you use unused pension annual allowance from the previous 3 tax years. If you didn't max out your pension contributions in those years, you can carry the unused amount forward and use it now. It's completely legal. It's incredibly powerful. And it's sitting there waiting for you. Imagine this. You're standing in the 2025-26 tax year right now. You can look back exactly 3 years. That means you can access unused allowance from 2023 to 2023-24 and 2024-25. But here's the game changer. On April 6, 2026, that 2022-23 year drops off the window completely. It rolls out. It vanishes. Poof. Gone forever. Let's be real, you need to know these numbers cold. In 2022-23, the annual allowance was £40,000. Then in 2023-24, the government raised it to £60,000. Same for 2024-25 and the current 2025-26 year. That means if you use none of this allowance, you could theoretically contribute up to £220,000 before the April date. Nobody tells you this. £220,000 in total pension space. That is shocking. Now, most of you won't have the full amount available because you've made some contributions already. But even if you only have 20 or 30,000 in unused carry forward from 2022 or 23, that's still an insane tax saving. And coming up, I'll reveal exactly how much tax you could save at every income level. Here's what's changed everything for me. Pension contributions get tax relief at your marginal rate. Basic rate taxpayers save 20%. Higher rate taxpayers save 40%. Additional rate, 45%. And if you're caught in the 60,000 to 125,000 trap, your effective rate is a mind-blowing 60%. Dr. Elaine Sherwood at the University of Bath documented this trap extensively in her 2023 tax efficiency study. Listen, if you earn between 100,000 and 125,000, the government steals your personal allowance. For every £2 you earn over 100 tech, you lose £1 of tax-free allowance. Professor David Miles at Imperial College London has called this one of the most punitive effective tax rates in any developed economy. Pension carry forward destroys this trap. Here's the truth. Let's say you're a higher rate taxpayer earning 80,000. You contributed nothing to your pension in 2022-2023. That means you have £40,000 of unused carry forward, expiring April 5th. If you contribute that $40,000 now, you get 40% tax relief. That's £16,000 back. 16 grand for doing something you should be doing anyway. Most people don't know this part. Carry forward has strict rules. First, you must have been a member of a registered pension scheme in each year you want to carry forward from. Second, you must use your current year's allowance first before dipping into previous years. Third, you go in order. Oldest year first. That means 2022-23 gets used before 2023-24. This ordering is exactly why the deadline matters so much. This is where it gets crazy. If you're a limited company director, your company can make employer pension contributions for you. These come out of pre-tax profits. No national insurance, no income tax, is a corporation tax deduction. A 2024 study by the Chartered Institute of Taxation found that employer contributions through carry forward saved UK company directors an average of £12,800 in combined tax and NI per claim. Let's be real. If you're a very high earner, over $260,000 in adjusted income, you might face the tapered annual allowance. This can reduce your allowance down to just £10,000 per year. But here's the shocking part. The taper only applies to the current year's rules. Your carry forward amount from 2022 to 23 is based on that year's taper calculations. And coming up, the biggest mistake people make with this. Nobody tells you this. The number one mistake? Waiting until the last week. Pension providers can take weeks to process large contributions. If you submit on April 3rd, it might not land in your pension until after the deadline. Royal London's 2025 annual pension report found that 31% of carry-forward contributions submitted in the final week of the tax year were processed late. That could trigger a tax charge. Don't be that person. Here's what changed everything for my viewers who acted on this. Step 1. Check your pension contribution history for 2022-23, 2023-24 and 2024-25. Your provider can give you this. Step 2. Calculate your unused allowance for each year. Step 3. Confirm you were a pension scheme member in each year. Step 4. Make your contribution well before April 5th, 2096. Step 5. Keep records for your self-assessment. Imagine this, that £40,000 you contribute today doesn't just sit there, it grows. Professor Andrew Clare at City University London's Cass Business School showed that pension investments compounding at 7% annually would turn 40,000 into over 157,000 in 20 years. Tax-free growth inside a pension wrapper. Every single day you delay is money you're leaving on the table. Here's the truth. This is not something you can fix later. There is no appeal. There is no extension. HMRC doesn't care that you forgot. On April 6, 2026, your 2022-23 unused allowance is gone permanently. And next year, the same happens to 2023-24. This is a rolling guillotine. Every year, another year drops off. If you're not doing this in 2026, you're literally leaving money on the table. Most people don't know this. For large carry-forward contributions, Getting professional advice isn't optional, it's essential. A qualified financial advisor can run the exact calculations, check for taper issues, and ensure you don't accidentally trigger the annual allowance charge. The Money and Pension Service recommends professional advice for any single pension contribution over £10,000. This isn't DIY territory for most people. Let me bring this all together. You have unused pension allowance from 2022-23. It expires April 1st, 2026. Contributing now gives you massive tax relief, compound growth, and retirement security. The research from the IFS, City University, and HMRC all confirms this is one of the most powerful wealth building tools in the UK. Don't let it slip through your fingers. Act right now. If this video just saved you from losing thousands, smash that subscribe button and hit the bell. I read every single comment. Drop below and tell me, are you going to use carry forward before April 5th? Share this with someone who earned over 50k. They need to see this. I'm Hamid from Wealth Decoders. Your money, your future. Let's decode it together.